Welcome to Invest. We talk about investing, finance, and professional development. As a core time of 9:28 a.m. on Eastern Time, Ethereum country $2,547, down about 3.34% so far. Respect to over crypto market on this Mother's Day on the East Coast in New York City as of today, we are currently laying at the next resistance level for Ethereum at the 2550 at the moment. And respect to the Bitcoin that's dragging down the entire market, you could see that we have had the breakthrough of the 38500 previously, and then subsequently broke through all the respective levels, which, as we know, those are non-substantive resistance levels. So as you have the propensity to go down, you subsequently will go down in a one straight shot to the next level of resistance of $35,000. But you could see that clearly. We also broke through that yesterday, which subsequently popped the balloon for Ethereum to be below the 2750 as a consolidated level, right? You can see that clearly we are, or as of this morning, I don't know what time it was, but I was probably still dead asleep around like 4:35 a.m. in the morning on the East Coast, obviously. We subsequently went down to the 34 200 at a brief second and subsequently got reversed back up. And the reason why we did is because by the time we got there, we were at the 27, 26 out of 70 on the RSI scale, bouncing back up to more of a, I guess, an optimal level of oversold, which is still oversold, right? At 33 out of 70 at the moment right now, right? And so right now we are at the next comfort level, but what's the momentum looking like going forward? Let's just dive right into it, right? It seems like on this Mother's Day is still a red day, and this is kind of something that is expected in a way, knowing the fact that last week we did have, collections of negative news coming from the chairman of the Bank of England, coming out from Jerome Powell, obviously with respect to interest hikes, foreshadowing the 25 basis point to 50 basis point, but no confirmatory signal around the 75 basis point at all. But, with respect to immediate affectation, driving more stir emotionally onto the market, saying that with respect to the recessionary fear seems like it's quite imminent. At the same time, it can be detrimental to the profit earning potential across corporate companies, but subsequently cutting into our expenses as well. That with the higher costs at the same time, same level wages, it will make our life a lot more difficult, right? So when you're screaming that in people's face, foreshadowing recession coming, people tend to liquidate financial assets, and the reason because of the liquidation is because of the bond yields, right? It hikes as that type of negative affectation comes out, right? So right now we are seeing that in full spectrum, but again, there's a lot of emotions in play. And if we take a frame of the macro market cycle dynamics, we are within the depression stage, which, as we know, you're gonna have to hit that like deep death valley, if you may, right? As you hit that valley, you're gonna subsequently come back out. As you climb back out of the valley, slowly lean towards to the next stage, which is gonna be another whiplash, which is called disbelief, right? And why is it called disbelief is because people are gonna think that, oh, we're gonna be coming back up, but because of the fact that we had that cry wolf type of affectation from the market so far, that people will typically don't believe that, oh, this is it, this is just another bull trap. But to their disbelief, right, it's a disbelief, right, that after you get through that disbelief, which you have like a slight dump, which is mostly driven by retail investors, then you're gonna go slide back up to the hopeism, optimism, and then subsequently back into the bull market, right? So we'll see how that goes right now, right? But because of the recessionary compression that we're seeing across the market, we are seeing a drive of sell off combined with weekend affectation on this Mother's Day weekend on Sunday so far. Okay, so let's just dive into technicals without wasting more time. Respect the recording time of 9:32 a.m. on the Eastern time. We are at the level of consolidation of the 2550 at the moment right now, right? We're down about 3%. At the moment right now, in terms of the inertia, we're still leaning downwards, but we know that We are not really finding a needle back up. We have no V shapes yet on both the MACD and the RSI. But something we know, right? We are very oversold, right? And we're gliding at the next level, which is matching with what we have had before, right? Back on March 15th, before this whole rally up, right? So we basically gave up everything that we've gained so far, back down to where we came from, right? So right now it's just a relatively a strong resistance level based on the historicals, right? If we break below 25, we will go down all the way to somewhere around like the low 2350, at the flash crash level 2150. Okay, so that's something to think about. So how do we look at it right now? I think we need to look out for how the later of the day will open up on the international side of the market, knowing the fact that China and overseas, they're ahead of us. As the market opens, we should see some sort of a triangulations of how the picture will look like going forward. We also have to look into the stock futures as well, right? Again, if the bond yields is going to be spiking next week as well, we're going to see more volatility, right? And the reason is not because like people want to sell crypto for the sake of selling crypto when the bond yield is hiking. It's because they need to take more cash away, to put into their piggy bank to pay a higher amount of debt interest payment, on a monthly basis. So it's like more of sucking in your dollar to be just paying more debts because interest rate is hiking. You know what I'm trying to say? So respect to Bitcoin, down about 2.5%. You can see that clearly in the same affectation. Need to look out for the needle to come back up first, right? Right now in the mid level, right? The next level logically will be 34,000. If we break 34,000, we're gonna go down quite sharply to 32,500. But just know that as you get further and further down, you have a high propensity to go back up. That because like we are at the submerged submarine level at the moment right now, right? In respect to Ethereum Classic, you can see that right now is a dip, right, at the 35 out of 70 is a lot more normalized in comparisons to the other coins that we just talked about, right? You can see that we're fusing together, about to form a golden cross. So I think Ethereum Classic is actually a relatively good buy. It's pretty rock bottom at the moment. Respect to Dogecoin, down about 1.7%. I like anywhere from basically 12 cents to going down from here. Cardano's down about 2.8%, right? 75 to below is logical based on the current setup. Solana, we are touching closely to the bottom. 85 to 75 from here would be where I would be DCAing at, right? Respect to XRP, down about 4%. Anywhere from 69 to 57 would be where I would be DCAing at. Polkadot's down about 5% as well. Anywhere from basically current level down is logical DCA. We are rock bottom at the 29 out of 70. Relatively static, but this is like the rock bottom that we have formed ever. So historically low at the moment. So it seems like this is not the best assets in terms of incurring. We are closing in on the real level of the $12. So as you get closer to $12, I think it's a good dip. But I think right now it's actually fair already. Respect to Algorand's about 4%. It's still lingering on, right? Coming back up. We could see that, right? The zigzag upwards. With the 56 out of 70 right now. So I would prefer not to get into this one right now. At least not at the moment. Like obviously, when we talk about anywhere from 60 cents below from there, right? Shiba Inu down about 2%. As we break below this, you could keep going down, right? And the level that we broke was 2100, right? 2100, 1400, 900 would be the respective levels, right? MACTAX down about 3.5%, right? We broke the $1, right? So the level when you go down, ideally it would be 95 as a first level. Subsequently to 89, basically just lingering around 90 again. And then you're going to have a relatively sharp drop to 76 all the way to 70, okay? AVAX down about 5%. Basically current level 60 to 50 from here. And then Luna is at 61 right now, down about 11% basically, right? You saw this head and shoulder pattern, and as we broke 75, 62, which is where we at right now, 52 would be the next level, 45 would be the next level, right? So we watch out how the international market will open up later today. Obviously, we're still like 10 hours away, right? Approximately. And it's definitely, we are relatively oversold across the board. So a rebound, as we get more optimistic signals from the market, will drive a relatively sharp rebound, right? And I think we are continuing to zigzag. We have broke away from the channel, right? But the channel is hypothetical, right? So we could technically just zigzag on a sideways fashion going forward, right? So again, the green line that I'm drawing here is a reference, but I do foresee just like continuous zigzag on the channel going forward. So let me know if you have any questions, right? It seems like we are still forming like within the technical pattern that we need to. But if we really break the current level of 2550, that will be a little bit worrisome. That means we're trending in a different direction. So we have to keep an eye out on it. Right now, like the propensity of actually doing so right now is, expecting that it will form an upward wedge, which will subsequently be a downfall for us. But if we have a downward wedge, that will be a different question. We'll drive an upward wedge, upward surge. Sorry, but right now you can see clearly the peaks are like elevating. Right, it's not like on a depletion mode on escalating down. So something to think about. But again, I'm not in the position of predicting future. But I do think this is still logically sound based on the current setup. We are leaping at the ideal level that we ideally look into, so the technical and the market dynamic makes sense so far. Okay, so have a good rest of the Mother's Day or this Sunday, and I will catch you on the next one. Take care. Bye.